Okay, so we're going to have a look at the 2017 final accounts question and a particular working six. Working six reads as follows. It says, a creditor who was owed 7,600 accepted office equipment with a book value of 6,500 in full settlement of the debt. This office equipment had cost 11,000. Now, it's quite a bit of information in that two sentences actually. Somebody who we owe 7,600 to, but they accepted office equipment with a book value of 6,500 in full settlement of the debt. So therefore, we're giving them a piece of equipment, maybe a photocopier or something like that, which is now worth 6,500. So we're receiving some discount in that situation. We're receiving €1,100 of discount. That office equipment had cost 11,000. So when we remove it from our accounts, we are also removing some accumulated depreciation. If it's now worth 6,500, it has depreciated by 4,500. That 4,500 of wear and tear must also be removed from our accounts. It's no longer our problem. Now, no entry has been made in the books in respect of this transaction. And then also it says, provide for depreciation on all office equipment held at the end of the year, which is after we remove that, at a rate of 20% of cost. So what we need to do here is we need the following T accounts. We need a T account for creditors because we're removing a creditor. We're also taking out some equipment, so we need an equipment account. There will be a reduction in our depreciation, so we need a depreciation account. And as I referred to earlier on, there will be discount in this, so we need that account as well. So there's the 4 T accounts I've set up like that, and the trial balance number for all 4 of those is already inputted from this information here, the trial balance information. So how do we cancel a creditor? Well, these are all 78,000 is all of the money that is owed by this company. So if we go in here and we wish to cancel a creditor or take one out, we put it on the opposite side. So we're going to put 7,600 on this side. How do we remove a piece of equipment? Well, you put it on the opposite side as well. So we're going to take out that 11,000. That's the new equipment, or sorry, the equipment that we are selling. But the depreciation on that must also be removed. And again, to remove something from an account, you put it on the opposite side to where the balance is. So we also need to remove 4,500 depreciation. Where do we get that 4,500? Well, I'm going back up to here. The equipment originally cost us 11,000. It's now has a book value of 6,500, so it is carrying 4,500 wear and tear on it. Those 3 reds are the 3 things that you remove. But of course, you'll notice that the debits and credits do not equal here. 4,500 and 7,600 adds up to 12,100, whereas here we only have 11,000. So we need €1,100 of discount on the credit side to balance out. Now we have 12,100 on the credit, and we have 12,100 on the debit. Where do we get this 1100 apart from it being the balancing number? Well, again, to go back, we owed somebody 7,600, but they accepted 6,500 in full settlement. So they gave us 1100 off, or we received 1100 off. Discount received is an income. Now that's pretty much that done, but it does say then that we have to do profit and loss at the end of the year as well. So it says provide for depreciation of equipment held at the end of the year at a rate of 20%. Now how much equipment is held at the end of the year? Well, if you take this away from this, you'll find that you now have equipment worth 14,000. We could also do this, by the way. This is 70,000. We're just balancing this out. 70,400. Now down here, we can work out our profit and loss depreciation for the year, for this year, which is the year 2016, and we're being told in the question that that is 20% of cost of the equipment held at the end of the year. 20% of 14,000, which is at 2,800. And finally, we can also add up this one, and that gives us 4,300 as an income here. Now I should go back here and balance the depreciation account. and 10 and 10 and 2,812, take away that 4,500, you're going to have a depreciation here of 8,300, which is our accumulated depreciation. So now when we look at our T accounts, we have a new creditors number of 70,400 because we've removed one. We have new equipment of 14,000. We have accumulated depreciation starting with our previous years, taking out a disposal, adding in this year's new one of 8,300, and we have new discount of 4,300, which is an income. We can enter in here. I'm just going to show you what the balance sheet would look like for equipment. This is going to be 14,000 coming from this, and this is going to be 8,300. Now, I would like to point out here that this could be done similar to how we do the depreciation of delivery vans in the delivery vans usually working too. We could have put in here 25,000 as our trial balance number and 10,000 as our trial balance number. You take out the old piece of equipment, which was the 11, and you take out the old depreciation on said equipment, which was 4,500, and you add in the new piece of equipment, which is actually 0, and you add in the new depreciation on all equipment, which is at 2,800, and when you add those up, that's the numbers you get anyway. Our book value is 5,700. The reason I'm showing you this here is to point out that this process that we do when we depreciate delivery vans could just as easily be done in T accounts as well, and this is an example of how it can be done in T accounts. You don't need to do it both ways, you do it whichever way you find comfortable. That's that one done, thank you.